Hey, what's going on, guys? Update from YieldMax ETFs. They just announced that they will be paying distributions on BIGY and SOXY. And those two ETFs are their target 12 ETFs. So, pretty much they're targeting 12% annually, and then, minus the fees and whatnot. But those numbers came in at 51 cents for BIGY and 52 cents for SOXY. Let's go to the press release here and look at some of the data. So, like we mentioned, BIGY is 51 cents, SOXY is 52 cents. BIGY, remember, it is targeting 50 large cap ETFs to kind of run this strategy on. They're going to be doing some synthetics. They're going to be purchasing shares. They're going to be selling calls against it. Lots of different strategies that are using within that. And then same with SOXY, same idea as BIGY, but they're targeting semiconductor. So that is that. Let's look to see, a 51% distribution. Normally they illustrate what kind of yield that is, but obviously I think it's going to be close to that 12% yield. But let's say 51 cents and some change there. Okay, so they're not going to show me the current price. Okay. So $51.33 is what we were trading at the close yesterday. Pre-market today, it looks like it's ripping up a little bit, $54.88. But if we pull a calculator up over here, so it was, 0.5130 times 12. If we annualize that at times 12, divided by 51.33. Yeah, so they're pretty close to that 12% yield. And I think that's what, obviously these funds are called target 12 funds. So they may make more than that within their underlying strategies and stuff like that. But it appears that this is how much they're going to distribute. So that is kind of the structure of these funds and how they work. It'll be interesting to see, the expense ratio is still pretty high, right? And that's not something I'm a huge fan of. But, hopefully as they get more assets under management, they'll be able to drop this number and be able to be a little bit more competitive with some of the other funds. Look at the JEPQs, the NEOS funds. I think, if you look at SPYI, I think this is a 0.68. Yeah, so a little bit more competitive there. So YieldMax has some work to do. They got to raise their assets under management for sure. But after that, they need to lower their expense ratio. And, bottom line, in order to compete with some of these other funds, that's what they're going to have to do. Looking at a JEPI, I don't think it has quite a 12% yield. It says 7 on this website here, but their expense ratio is 0.35. So they're going to have to drastically drop their expense ratio to be able to compete. But you look at the net assets under management, this is crazy for JEPI. It's $36.9 billion. Let's see what some of these other ones are. So the NEOS fund is $2.62 billion. And then the YieldMax fund is $8.79 million. So if they could get over the billion mark, that would definitely probably help them. And then they could, justify lowering their expense ratio. But until then, we're going to be paying a little bit higher on the expense side for sure. So looking at SOXY, same kind of idea here. They're targeting that 12% yield. So it came in at 52 cents. That's what they were going to be paying it. And the current price is 52.58 or was yesterday. So 0.528 times 12 divided by, right at that 12% level. So that's pretty interesting. So I don't know exactly how they're, declaring this distribution amount and stuff like that. If they're just, because obviously I imagine they're probably making more than that in the premium, but they're just going to keep it within the fund for the longevity of the fund. Or maybe whenever they're selling their premium, they're selling it further out of the money and it's kind of, a little bit more conservative. That's why they're producing a smaller amount of yield here. So I'm not sure how much Yahoo Finance will show us on this website, but these are the top holdings, obviously, semiconductor names. Let's see. We may have to go to YieldMax's site if we want to see the actual, the options that they are holding. Yeah, so I don't see it in this list, unfortunately. Let's go back a little bit, see if we can go back and find it somewhere else here. Okay, so let's go to the BIGY page on their website. Make this bigger. All right, so if we scroll all the way to the bottom, you can see their holdings are right here. So let's zoom in a little bit so you guys can see it a little bit better. So these are just the top 10 holdings as of January 7th. So they have Apple, 4,230 shares of Apple. They're selling a covered call at the 250 strike. But they also purchased a 265 call. So this is more of like a synthetic covered call. Looks like a call spread to me, honestly. I don't know what what is Apple currently trading at? APL stock. Okay, so it's trading in that 245 range. That's pretty interesting, to say the least there. So, they don't have a whole lot of runway, right? It's pretty close to at the money, this synthetic spread. So they'll probably have to roll that. They got about 10 days until that spread expires. But yeah, needless to say, they're doing probably more of a conservative strategy on their side of things. So a little bit further. So this strike, it looks like it's $10 out of the money right now. It's got about, over a month before expiration. They're selling 5 of them. So yeah, pretty interesting. I wonder if they're like selling premium and then using the cash they get here to create a call spread. That would be pretty interesting if they're doing that. I can see where, that's a possibility. But needless to say, time will tell. We'll see how things kind of shake out with this Target 12 fund. If they could definitely, these YieldMax funds have gotten a lot of bad reps for their NAV erosion for sure. So hopefully these Target 12 funds perform well. Obviously depends what the underlying does, right? Their funds can't do good unless, Apple, AbbVie, Adobe, Abbott, they all have to do well as well. Like obviously we go into a bear market, they're going to follow the market. So, but yeah, guys, that's pretty much it. I just kind of wanted to touch base on those 2 distribution announcements that just came out this morning, and they are going to be the first distribution announcement for these funds. Yeah, so there's no dividend history yet, but this will be the first one. And once again, they're targeting that market of like that 12%. That is their goal there. So stay tuned. We'll see how well these funds can perform in 2025. Hopefully the market stays bullish for their sake, and they can continually perform well. I'm excited for YieldMax. Hopefully they can have some success with these types of funds. You're getting a smaller yield, but more importantly, you're getting capital appreciation. So if that's what you want, if you're a younger investor and you care more about, capital appreciation, this might be an ETF you can look at. I think this range probably makes a lot more sense, as far as not having to drip your dividends, and being able to kind of, survive. Obviously not financial advisor here, so do your own research, but the idea would be like you buy 1,000 shares of BIGY, right? So 1,000 shares is going to cost you, I don't know, is it $50? So like $50,000, 50 times 1,000. So it's going to cost you $50,000 or, whatever amount that you invest into it. But the idea is that that's the only time you have to invest into this fund. And then after that, the market's going to go up and down, right? The market's going to go up and down, whatever, but you're getting distributions every single month. You don't have to drip them. You can use that money to go live your life. Like you don't have to reinvest that dividends into something else to pretty much just hold your value, hold your NAV per se. I think anything below 10-12%, obviously you get into the SCHDs and the smaller yielders. Those are even less risky and more conservative per se as far as their NAV erosion. But yeah, I think long term, at least for me, these funds make a lot more sense than a fund that's paying out 100%, right? Just because the funds that are paying out 100% are great, but you're gonna have to pay taxes, and that's a whole nother ball game. Plus, you have to, it doesn't make sense for me that you have to drip back into the fund in order to break even or be positive. That's taking all the risk off of YieldMax and moving that risk onto us, right? Which is not something I'm a huge fan of. But yeah, these funds make more sense to me. I think utilizing both of their different types of funds can make sense. And obviously a lot of people have had a lot of success with, Misty this past year. Misty, NVDY has been a great one. But, not too often you find funds that pay distributions like Misty and continually perform like Misty. Obviously that was a big factor of MSTR, their underlying going, doing 40% or 400% last year. But, are they going to be able to always do, put up those types of numbers? I don't know. We'll see. Yeah. So their performance since February of last year is up 225% on a fund that's yielding, over 100%. It's pretty crazy, and it's definitely a unicorn for their funds. But if you look at some of their other funds, there's kind of been kind of the opposite, right? So I have no idea what SQY has done. They're paying a 43% yield. So this is actually one that's done pretty well. Also, but there's some funds that haven't done well for them. There's some funds that have done well for them. It's a new space, right? Not a whole lot of funds typically have paid out all of their distributions, and it sounds like that's what YieldMax has been trying to do, and they're kind of innovative in that space. But time will tell for sure. We'll see, how things kind of shake out. They have a lot of funds, and they're coming out with more funds. I imagine eventually some of these will get deprecated, and they'll kind of get rid of some of them that just aren't performing well. These are two new funds I haven't really looked at a whole lot of, but it looks like it's implementing some type of Dorsey Wright featured fund and a hybrid fund. So I haven't done a whole lot of research on those yet, so can't really talk about those. But these are the two target 12 funds they have. I imagine they'll probably come out with some more of these, to try to compete with the JEPQs and the SPYIs and the NEOS funds, and the short option income ETFs. These are inverse funds. Haven't really touched those either because it just gets even more confusing to me if you're buying bullish funds and short funds. The Ultra Fund, this one's gotten a lot of heat. It uses several different types of strategies. I know they're also holding 3x leveraged funds. So if you look at, I can't see it right here, but I know they hold TNA and some other 3x leveraged funds that I like to trade. But time will tell to see how this one performs too. But then they also have their fund of funds, obviously. YMAX, YMAG, their two new Dorsey Wright funds, and then their single stock funds, except for OARC. But yeah, time will tell. I wish YieldMax the best. I hope they can be successful, and they can make their investors successful as well. But we will see. Stay tuned for more YieldMax content, more content about how you can passively invest into the stock market, build your wealth, with dividends, index funds, options, and so forth there. If you're a new subscriber, please like and subscribe down below and stay tuned for more content coming your way.